Hey, what's up, everybody? Welcome to, well, I guess it's live leaks or something. I don't know what we're gonna call the title of these actual episodes, but they're clips that came from my live stream, which I run almost daily, 6 days a week. So, anyways, I got a question from Christopher Michaels about what are my thoughts on the IVV stock or ETF. It's called iShares Core S&P 500 ETF. So it's basically an S&P 500 tracker. It's a new ETF that was released on Stash probably about a week and a half to 2 weeks ago. So he was asking, what are my thoughts on this ETF? And as far as the actual ticker or ETF goes, I think it's a solid ETF. It's going to be similar to the Vanguard VOO. As far as that goes, I like it. However, my criticisms would be that it is an S&P 500 tracker. So if you're only looking to grab the growth that everybody else is getting pretty much with an S&P 500 tracker, then this one would be right for you. Also, say your account is not performing as well as you would have liked because for whatever reason you have been picking some bad ETFs or bad single stocks or something like that, consider exposing yourself to a S&P 500 tracker so at least you can get market growth, you know? So if your account's not beating, I think the S&P 500 usually does about 11% year over year. So if you cannot get like that 11% growth or whatever in specifically your stocks, then I would look into maybe utilizing utilizing the IVV ETF, so that way you can still get at least market growth. You're not having an account that's underperforming. So a lot of people use the S&P 500 or the Dow Jones Industrial Average to gauge whether their ETF or whether their portfolio is overperforming or underperforming. And if you're beating the S&P 500 or the Dow Jones, then you got an overperforming account. So you're doing something right. You're making better picks than what's held in that S&P 500 or what's held in the Dow Jones. I do like this because, like I said, it's typically in past years it gives about 11% return, which I think is substantial for an account anyways. And then maybe look into pairing that with a bond. But as far as like all the ETFs and stocks, I think that this is one that most people should expose themselves to. While it still gives you only market growth, the growth that's on the market, I think that still, at least you're being able to capture some level of growth, considering that your other ETFs or whatever start underperforming or something along those lines. Anyways, so that's my thoughts on the iShares S&P 500 market. It's going to be a solid ETF. I don't expect it to go anywhere. It'll continue to track the S&P 500, do exactly to almost the T of what the S&P 500 does. Anyways, guys, it has been real. Thanks for watching. Feel free to check out these other 2 videos and don't forget to subscribe. Much love, and as always, thanks for watching. I really appreciate it.